Hi students, in the last class we saw the what do you mean by journal book, what do you mean by journalizing, what do you mean by journal entry, what do you mean by narration. There are two types of the journal entries, okay, so the simple journal entries as well as the compound journal entry, okay. So I hope all of you understand that lecture. And the very previous years in the very previous lectures we saw the how to pass the journal entries, means what's the working note we have to prepare, as well as the how to apply the rules, okay, the personal rule, real rule, as well as the nominal rules, okay, how to apply while passing the journal entries, okay. So you know the rules of the accounting rules, the personal rule, real rule, as well as the nominal rules, okay. So what's the personal rule? Personal rule is what's debit is the receiver and credit is the giver, so this is the personal rule. What's the real rule? Debit what comes in, credit what goes out, so this is what's the real rule. And what's the nominal rule? Nominal rules is what's it's related to the expenses and the incomes, okay. And but what's the rules? Debit all the expenses and losses, credit all income and the gains, okay. So with the help of these rules we will pass the journal entries in the books of the journal account, okay. So now see, in this session we will solve problem on the journal entry, okay. So this is the format of the journal account, okay. So there's a date column, particular column, LF column is the ledger folio, so it means what's from the ledger the transaction is passed, so we have to write the page number or the transaction number here, okay. So the debit amount column and the credit amount column, and the last row is what's the total, okay, the total of the debit column and the total of the credit column, okay. So actually this is the format of the journal account, okay. There are the five columns: date column, particular column, LF column, debit column, and the credit amount column, okay. So like this we have to draw the format while passing the journal entries, okay. So I hope you understand the format of the journal account, okay. So now see the problem we will see on the journal, okay. So now see, this is the problem number 1, okay. Journalize the following transactions of Sri Shankar in the year 2009, okay. So in the year 2009 we have to pass the journal entries, okay. So their date is given here, okay, as well as the date wise transaction is given, okay. So date wise transaction is given in the year 2009, okay. So now see, on the first what's the first transaction on 1st April, okay. On 1st April, what's the transaction? Shankar commenced the business with cash rupees 20,000, okay. Shankar commenced the business with cash rupees 20,000. It means what? Business started by the Shankar with the cash rupees 20,000. Commenced means what's the started, okay. Business started with cash rupees 20,000. So you know there are 5 steps or the 4 steps are there to apply the rules. And the first step is what's ascertain the two accounts affecting in the transactions, okay. Just try to understand the two accounts. First account is the what's commence the business, it means what's the Shankar, okay. Shankar commence the business, it means what's the capital account and the with the cash, okay. So these two accounts are affecting capital account and the cash account, okay. So now see, this is the solution, okay. So this is the solution. So this is the format: date column, article column, LF column, debit column, and the credit amount column, okay. So in the date column, so 1st April, okay, April 1st, okay. So which are those two accounts are affecting? Cash account and the capital account, okay. Now next step is what's to ascertain the type of the accounts, okay, type of the accounts. So cash, it will come under the real account, and the capital, it will come under the personal account, okay. And what's the real account rules? Debit is what the comes in, credit what goes out, okay. What his name? So Shankar invested money, no, in the business, so it means cash comes in a business, okay. So cash what assets what comes in, okay. So it is a debit, okay. Cash account debit, the amount is 20,000, we have to write in the debit column, make it dash in the credit column. To capital account credit rupees 20,000, okay. And so this is nothing but what the narration being started business with cash. What? Being started business with cash. Okay, so this is the short explanation of this transaction. Okay, so summary of this transaction. Okay, being started business with cash, and narration is start with the being word. Okay, narration start with the being word. Okay, so like this we have to pass the journal entries. Okay, so now next transaction is what's on 4th April. Okay, on 4th April, what's the transaction? Purchased goods from Ramesh rupees 2000 on credit. Okay, so first of all try to understand this is the which type of transaction. It is the purchase transactions. Okay, again question is arise, is the credit transaction or the cash transaction? So they directly they mention here the credit transaction. Okay, so if it is not mentioned, then also it is a credit transactions, because the only particular name is given. If the particular name is given, then you assume it is a credit transaction. Okay, purchase goods from Ramesh, if it is given like this, you have to assume as a credit transaction. Okay, so purchase goods from Ramesh rupees 2000 on credit. So it means what's in these transactions, which are those two accounts are affecting, which are those purchase account and the Ramesh account. Okay, purchase account and the Ramesh account. Okay, so now see here, on April 4th in the date column, April 4th in a particular columns, purchase account and the Ramesh account. Okay, now second step is what's to ascertain the name of types of the accounts. So purchase, it is the nominal, and Ramesh, it is the personal. And the nominal rules is what's debit all expenses and losses, and credit all income and gains. Okay, and what's the Ramesh personal is rules what's debit is the receiver, credit is the giver. Okay, so we are purchasing from the Ramesh, and this is the giver, so it is a credit. Okay, and purchase is the expenses, so it is a debit. Okay, so purchase account debit, in the debit column, amount column rupees 2000, to Ramesh account credit rupees 2000 in a credit column. Okay, so what will be the narration? Being purchased the goods on credit. Okay, so this is the short summary of this transaction. Okay, next the third transaction is what's April 6th, paid Ramesh rupees 500 on account. Okay, paid Ramesh rupees 500 on account. So it means what's paid means what? Paid cash, paid to whom? Ramesh. From whom? From the business. Okay, from the business he paid the cash to the Ramesh. Okay, so in these transactions there are two accounts are affecting, which are those two accounts? Ramesh account and the cash account. Okay, what's Ramesh account and the cash account? Okay, so now see, on April 6th, Ramesh account and the cash account. Okay, so this is the first step. Next step is what's to ascertain the types of the accounts. Okay, Ramesh, it is the personal account, and to cash account it's the what's a real account. Okay, so Ramesh, what's the personal account? Debit is the receiver, credit is the giver. Okay, and so Ramesh is the receiver, because business is paying to the Ramesh, so Ramesh is the receiver, so it is the debit. Okay, and what's the real rules? Debit what comes in, credit what goes out. Okay, from the business cash is goes out, so it is a credit. Okay, so Ramesh account debit rupees 500 in a debit column, to cash account credit in a credit column rupees 500. Okay, so being cash paid to Ramesh. Okay, so next transaction is what's on April 8th, sold goods to Rajan rupees 900 on credit. Okay, so sold goods means what? It is the sales transactions. What? It is the sales transactions. But again question is arise, it is a credit transaction or the cash transaction. So this is what's credit transaction. So in these transactions there are two accounts are affecting, which are those sales account and the Rajan account. Okay, sales account and the Rajan account. Okay, so now see, there is a two accounts are affecting on 8th April, Rajan account and the sales account. Okay, what's Rajan account and the sales account? Okay, so now see, Rajan, it's the personal account, and sales, it's the nominal account. Okay, and what's the personal rule? Debit is the receiver. Okay, and business is going to sell to the Rajan, so that's why it's a debit. Okay, so Rajan account debit rupees 900, to sales account credit rupees 900. Sales, which type of account? Nominal. And what's the nominal rules? Debit what? Debit all the expenses and losses, credit all income and gains. Okay, so after selling we are getting, business is getting what's the income, so it is a credit. Okay, so being goods sales to Rajan. Okay, so this is the narration. Okay, so next transaction is what? So on 12th April, received from Rajan rupees 300 on account. Okay, received from Rajan means what received? Cash received from Rajan. Okay, so in these transactions there are two accounts are affecting, cash account and the Rajan account. Cash, it is come under the real account, and Rajan account it will come the personal account. Okay, so cash account debit rupees 300 to Rajan account credit rupees 300. Being cash received from Rajan, it is the narration. Okay, so like this we have to pass. Okay, and so next thing is what's on 16th April bought goods for cash rupees 600. Bought goods means what? Who bought? Business bought. Okay, bought means what's? Purchase. Okay, purchase goods for cash rupees 600. Okay, so in this transaction two accounts are affecting, purchase account and the cash account. What? Purchase account and the cash account. Okay, so now see here, purchase account debit rupees 600 to cash account credit rupees 600. Okay, so being purchased the goods on cash. Okay, so this is the narration. Okay, so next transaction is what's in 18th April sold goods for cash rupees 400. Okay, so this is the sales transactions. Okay, so in these transactions there are two accounts are affecting, sales account and the cash account. Okay, sales account and the cash account. Okay, so now see what will be the transaction on 18th April. Cash account debit rupees 400 to sales account credit rupees 400. Okay, being goods sold for cash. Okay, so like this we have to solve. Okay, so next transaction is what? So on 23rd April received a commission rupees 50. Okay, received a commission rupees 50. Okay, so received means what's received? Cash received. So in these transactions there are two accounts are affecting. Which are those two accounts? Cash account and the commission account. Okay, cash account and the commission account. Okay, so see here on 23rd April, cash account and the commission account. Cash account, it is what's? It is a real account, and what's the real? Debit what comes in, credit what goes out. Okay, because they are receiving the commission in a business. Okay, business is receiving, so cash is comes in. Okay, so debit what comes in. Okay, so it is a debit rupees 50,000 to commission account credit. So commission, it is what? It is a nominal account, and so this what's the nominal rules? Debit all expense and losses, credit all income and gains. Okay, so commission, it is a income for the business, so it is a credit 50 rupees. Okay, so being commission received, it is a narration. Okay, so next transaction is what? So on 26th, paid advertisement charges. Okay, paid advertisement charges means what paid? Cash paid for what? Advertisement. Okay, so there are two accounts are affecting, cash account and the advertisement account. How many accounts? Advertisement account and the cash account. Okay, so now see, so advertisement account and the cash account, so how it will be the entry? So advertisement account debit to cash account credit. Okay, so advertisement, it is expenses, so it will come under the nominal account. Okay, advertisement is the expenses, right? So it will come under the nominal accounts. And what is the nominal rules? Debit all expenses and losses. Okay, debit all expenses and losses. So advertisement expenses, so it is a debit, so it's 100 to cash account credit rupees 100, because cash goes out from the business and it's a real. And what's the real rules? Debit what comes in, credit what goes out. Okay, so this is the transaction. So next last transaction is what? On 30th April, paid salary of manager. Paid salary means, paid means what? Paid, cash paid. Okay, cash paid. Okay, to manager, or you can say salary account or manager account. Okay, so these two accounts are affecting. Okay, so see here, salary, because it is a expenses for the business. Salary is paying by the business to the manager. Okay, so salary account debit to cash account credit. Okay, cash goes out while after paying the cash. Okay, so like this you have to pass the journal entries. And lastly, the total, we have to calculate the total of the debit column as well as the credit column. It will be the same. Okay, if it is not the same, then your problem will be the wrong. Okay, so it will come for the 5 marks like this. Okay, the problem should be the tally, the debit column, total amount column, as well as the credit total column should be the tally. Okay, so like this we have to solve the problem. Okay, so I hope you will understand this problem. So if you not understand, if you have any query with this question, with this problem, then you can contact me. Okay, so thank you.